Hello, Paul Gerard from Price Accounting Services, and welcome to this video about what's new in 2025 for taxpayers, individual taxpayers. Well, it's a simple one. There's not a lot of changes. The tax rates, tax scales all remain the same. So there's no great changes there. There's some minor adjustments to things like the working from home hourly cents per hour rate, as there is a change to the car rate for car deductions where you use the cents per kilometre basis. Otherwise, all is pretty similar. A couple of the key issues that if we would compare, say, 2023, 2024 and 2025, there's a couple of things that are really changing. They're changing very rapidly. Now, we've referred to this in other information we've given clients, and that is the ATO has an enormous additional budget for audit these days. And I'm talking hundreds of millions of dollars of extra funding to specifically engage auditors, to engage with taxpayers, to find overclaims, incorrect claims, to deny deductions, and to reassess, perhaps even with penalties. Okay, so we will talk about that in a separate video on the audit risk indicators. The other issue that I need to explain for taxpayers who might have tax payable, or taxpayers who have a debt or a payment arrangement, from the 1st of July 2025, interest deductions for interest you pay the ATO will cease to be tax deductible. The reason for this is obviously is a disincentive to encourage taxpayers to pay their debt and stop using the government as a lender of last resort at a rate perhaps somewhat lower than a credit card. So we're drawing that to your attention so that from the 1st of July 2025, you can no longer claim new interest that you incur. If you've paid interest in the past year on a tax debt, that will continue to be reported in pre-fill. We'll claim that deduction. I just want to explain that because it makes a big difference to some of the issues when it comes to expectations. You might expect things are always the same, and then we turn around and say, sorry, there's no deduction now. So we just want to explain that. So watch out for our other video on these audit indicators, and if you're in business, we've got a further follow-up video which deals with what's new in 2025 for businesses. Now, one of the areas we probably need to further address is pre-fill information and the timing of lodgement for an early return. We get a lot of people who say, hey, look, I'm going to get a refund. I want to lodge my return bright and early. Fine, no problem with that. The problem is the ATO. They don't like it. They see an enormous risk indicator that many early lodgers fail to disclose all information. For example, bank interest, dividends, ETF income, and so on and so on. And later on, there can be an enormous cost burden for us to then chase you and say, you've got this letter from the ATO, you've failed to disclose some income, they want us to amend, or you are required to amend. And this just creates extra work. So to avoid that problem, we generally say to our taxpayers, hold back in the first 3 weeks and make sure your information's complete and accurate. We want to make sure that your employer has finalised your single touch payroll. Not all employers do that within the first 2 weeks. Some 3-4 weeks later. So if it's not finalised, the ATO will not let us lodge. The other further issues that can come up with pre-fill, lack of information. It's not consistent with a prior year, and there can be reasons for that. But the ATO do some cross-checks before we lodge a return. So let's use the example. Last year you had interest, this year you have no interest, or you don't think you have any interest. The ATO might say, we don't know if this is accurate yet. We want you to wait and to lodge once we have pre-fill information. Because the pre-fill information even can show $0 of interest. So little things like that. And also, we often get asked by people, hey, I know I've got some trust income, I've got some ETFs, and I know I've got that income, and I can see the cash amount they paid me, but I haven't got my tax statement yet, we can lodge with that. And the answer is no, we can't. We actually have to have embedded within the return a schedule for all trust income, and it's specific to each taxpayer. Husband and wife can even be different. Even if it's 50-50, there can be differences between one and the other. So it's really important we get that so it cross-matches with the ATO. So if you're in a hurry, don't let it put you off, but be really cautious about not being accurate because extra costs later result. Okay. So I hope that's been helpful. What's new in 2025? Not a lot. And we hope to hear from you. If you've got any queries, questions, or whatever, do give us a call. Oh, and by the way, prior to you completing your tax checklist, if you've got any questions, great time to ask it is there. Don't send it to us. Call us. We're more than happy to speak to you and guide you. You might have a specific question concerning crypto. I bought some crypto in the year. I haven't sold it. Do I need to report anything? Good question. We'll guide you with the answer, which is no, you don't. Also, the other common one we get with crypto is, how do I give you the information? And the simple answer is, we say this to dozens of taxpayers every year, consider using Coinly software, as the ATO uses it. So it will help you know the numbers to report to us on a simple couple of pages, and we can include that. Because if the ATO find things that are missing, they do generate queries. So I hope that's been helpful, and do look for our audit and review video, which is going to be linked here in the video. And if you've got any questions in the meantime, email us, drop us a phone call, anytime you like. Cheers. Hope that helps.